Hey everyone, it's Matt from Greatness Every Day, and in this video I'm going to talk to you about my investing tips for 2020. And we don't have to look at the stock market charts very quickly to realize that we are in a very clear stock market crash. And if you look at the Dow Jones or the S&P 500 or another index, you're going to see that there are decreases of 25 to 30% in the last 5 weeks alone, and nobody knows if that number is going to go up or if it's going to go down. And a lot of people are saying as well that we are in the beginning to middle of a recession. We don't know if that's true. By definition of 2 negative quarters, it isn't, but that's what a lot of people are starting to talk about. So we are very clearly in a very steep stock market crash. And these tips that I'm going to give you are principles that I use. There are 6 principles that I've come up with, I've created, I've compiled to put together to really govern the investing that I use myself. And I'd like to share those with you in this video because I really believe before you make any investment, these are 6 things that you should consider as you go through and invest your money, somebody else's money, or whatever. So what I do is I take a portion of my income and I invest that for the purpose of creating long-term wealth. So I'm not telling you in this video what stocks to invest in specifically, if you should buy this many shares of Tesla at this price or not. There are people out there that are way better at technical analysis, but I am going to share those 6 principles that I use every time I make an investment. And you can go ahead and write these down. That would be awesome. Or you can like this video if you want to support our channel that way. Or you can also financially support the channel by going through. And I've taken these investing tips and I put them on a canvas. It's a canvas. There are a couple different sizes. It's got a wood frame, but these are the investing tips that I use as I go through and make an investment on my own. Write these down. If you want to get a copy of the actual hardcover canvas, I'll leave a link to that down in the video description below, and I'd really appreciate that. But let's get into things right now. So the first investing tip is to set a goal. And I really believe that for me, this is one of the most important things, because if I'm going to use my money, I need to understand why I'm using my money to invest in the very beginning. So I go through and I'm looking at creating long-term wealth. I'm looking at creating a fund that I can use that's going to grow over time of 5, 10, 20, 30, 40, 50 years that I can use for myself or my friends or my family. And really creating that stability that a lot of people don't have as you look at 70% of American households living from income to income. And I do understand that at the time of making this video, there are a lot of people that have been affected by recent layoffs and stuff like that. I'm not saying that that stuff isn't real. I'm not saying that eventually that won't affect more people. I really empathize with those people. I'm providing this video because I do really care that a lot of people can hopefully take advantage of these prices that we see on sale and do that in a manner that they're not going to cause themselves to get in more financial trouble, but what they will do is be able to take advantage of the situation that we find ourselves in, because there are opportunities to move forward and to get ahead. And that's one of the things that right now I'm looking at doing personally. So understanding what the goal that you have is really important to investing any bit of your money, whether it's a small percentage or a large percentage. The second step is to go through and make a plan. What is the plan that you are trying to accomplish? For me, as I said, I'm building long-term wealth. I want to invest in good, solid companies that I use, and understanding that I need to diversify the industries and the companies that I'm supporting and purchasing a piece of. So as I go through and do that, I make sure that my plan is to not withdraw any money for 5, 10 plus years, as I've said. I want to make sure that I'm supporting companies with good morals that I would ultimately support and use myself. If I was a part of that company, is it something that I'm going to be happy to be a part of? And the third thing with that piece is I really make sure that I'm locked in. So I'm not going to withdraw my money if the stock goes down. I'm going to wait it out, be patient for the given time length that I've decided for each stock. And I think that if you do not have a plan, it's very hard to see and experience times like now where a stock market crashes or a recession could possibly be looming, and a lot of people see the negative signs in their investing accounts, and that can be scary, and that can cause people to deviate from the plan, and people can lose a lot of money that way. So I really think that it's important to stick to the plan that you have and only take a deviation from that plan when it's absolutely necessary. The third step is to make sure that you do your research, and there's a few different pieces to that one. I think that it's really important to go through and do research from quality sources rather than from sources that really shouldn't be talking about the matter that they're talking about, whether it comes to investing, money, or any other subject in life. Consider the source. Is it a good source? Is it a bad source? Is it a source that you could recommend to somebody because you trust it that much? At the same time, I like to go through and do my research about what is happening in the market. Okay, what are some of the general trends that I see? I do very little technical analysis. I kind of leave that to the other people, the other sources that I go to, and make sure that the sources I'm using are good quality ones. So I allow myself to do some market research, and at the same time I do some what I call legends research. If you look at somebody like Warren Buffett, where you can see where some of his money and his company's money are going to make their investments in. Be aware of what the big players are doing, right? Because a lot of the times they're very successful for a reason. So I like to mimic within a certain reason if I feel like I can really support a company, similar trades to what some of these bigger legends, as I call it, are doing, or to make sure that I really believe in a legendary company. The fourth tip is to diversify. So before I make my investments, probably once a month I go through and I say, hey, what sectors am I investing in? Do I have all my money invested in the tech sector? What if there was a problem with the companies in that sector, right? Then my portfolio would be down big time. So I want to make sure that I diversify in companies. I want to make sure as well as I diversify into sectors. One of the best ways that I find I can do this is, doing good research and buying individual stocks, but I really do like to buy ETFs or index funds, which really make sure that you get, depending on the ETF that you invest in, a share of many different companies or a share of many different sectors. And there are some great index funds to go out and purchase. You can look at doing research on those. Vanguard has a bunch of index funds. Or iShares are some of the most common, but it wouldn't hurt to do some research on index funds. And the best part about that is you get a share of so many different companies. For example, the S&P 500 index funds are always great ones to look at. You get a lot of great companies at a good price. Index funds now, as you see a general stock market crash and a really potential start to a recession, I think personally are where a lot of my money is going to be going because they have good gains, proven good gains year after year. Number 5 is to make sure that you are not emotionally investing. And this is something that I think is really good when I look at that canvas in behind me, because I'm able to go through and look at that point number 5, and before I make a trade, before I buy or sell something, say, is this a planned decision or is this an emotional decision? I think if you want to be a successful, good investor, make very good investments, you have to make sure that you take the emotion out of it. So you can look at your bank account and see your bank account in the negative quite often, and sometimes during times like these that happens, right? But at the same time, you're not emotionally investing. You're not throwing money here, throwing money there, just after this pursuit to make money, but you stick to the plan that you had in the very beginning. There's a reason that you came up with that plan in the first place, and you make sure you follow it. And the 6th step is to buy low and sell high. And you've heard that time and time again. You've also heard Warren Buffett say, be fearful when others are greedy and be greedy when others are fearful. But those two quotes go hand in hand, right? Ideally, you want to time the market so that you buy at a low rate and sell at a high rate. Okay, but at the same time, timing the market could make sure that you are going to go through and miss the potential bottom. So I really don't believe timing the market is something that you should do, but you should look at the percentages. As I said before, in the last 5 weeks, we're down 25 to 30%. Is it going to go up, down? Nobody knows, but that is still a 25 to 30% discount of some great companies and their original valuation before those 5 weeks, before that crash. So you are getting these companies on a sale. As you go through, one of the methods that a lot of people use is called dollar cost averaging. When you put a set amount every week, every month into an account that you can use to invest. So you're able to invest as the price goes up or as the price goes down, rather than just throwing all of a lump sum in at one particular time. It's a little bit safer, and at the same time, if you're working on a budget, you don't have necessarily thousands and thousands of dollars to invest and move around like some people do. This is a great method to get started with for sure. And when it comes time to selling or buying, you have to make sure that you have price targets set in place. Is this a good point? Is this a good money value to buy a certain company at? Or is this a good value to sell a company at, depending on how much you've made over the time? So that is very important. And so those 6 points as a quick review here are to set a goal, to make a plan, to do your research, to diversify, to make sure that you're not investing emotionally, and to buy low and sell high. If you want to write those down, please do that, or you can hit the thumbs up button. At the same time, that canvas, I think it's pretty cool. I set it up next to my office desk where I do all of my investing. It reminds me of all the things that I need to make sure I'm doing to make sure that I'm making a good, solid, quality investment. That canvas is linked down below if you want to support the channel financially. I really appreciate it. Any way that you can, drop a comment down below, and thanks for watching this video. Please click the subscribe button and follow us on Instagram for daily inspiration and encouragement to live a great life. You can also visit our website at www.greatnessEveryday.com. Hey, thanks for watching. We'll talk to you in the next video, and remember, choose greatness every day.